What is going on, investors? I'm back again, another stock analysis. Today, we're going to take a look at International Business Machine Corporation, better known as IBM. I did a review on this stock right in their last earnings, so about 3 months ago, and I went back and looked at it, and the stock is literally almost at the exact same price it was today as it was back then. So you might consider that a loss if you look at some good performance of some other stocks, but this stock, again, does pay a 5% dividend yield. Now, we will take a look at the earnings and all the latest announcements from this company. We'll dissect the numbers and then we'll finally get over to a stock chart, see where we're at here in terms of a chart perspective. But we will take a look at this dividend because you're not getting any kind of like capital appreciation on the stock. And when you look at the kind of a long-term chart of this, this stock has been flat for a while. And so you're really buying it for this dividend. How well capitalized is this company? Can they cover this dividend? Is it at risk? We'll take a look at all that. We got a P ratio of 14, so not necessarily high, but again, when you're not growing, not necessarily that great. Now, they just reported Q3 income and revenue, all in line with expectations. We see the stock was trading down on the previous page here, down about 1%, down about a third of a percent during the day. Not as bad as considering the overall market was down about 1.5% or more. And so not a bad day for IBM, but they did come in line. Now, gross margins, as we see, did tick up, but revenue and everything else kind of fell off from the previous period. So here we go. We got 3 months ended here, and then we got a 9-month view here, 19/20. Their number one business, or I would say their fastest growing business, the business that they're putting all their effort behind, is really this cloud and this cognitive service software. So we went from 5.2 billion up to 5.5 billion. So that's a positive. For the 9-month ended, we were at 15.7, and now we're up to 16.5. So pretty solid growth there. I think this is about 7 or 8% on the top line here for the last 3 months. Now, unfortunately, our global business services, that's declining. You see here, we see our global technology services, that's declining as well. It's holding true for the 9-month pattern as well. These are businesses that are on the decline, or at least that there's competition in the marketplace that is taking market share away from IBM. We see systems here going down as well, and the rest of this stuff is so small it doesn't matter too much. But we see here our total revenue, while we grew up here on our number one business or our fastest growing business, we see that revenues declined to 17.56 billion. That's down from 18 billion the previous period. So that's not a good sign here. And then right here, we see for the 9-month ended, it's held true too as well. We went from 55.4 billion down to 53.3 billion dollars. Now, the story though is take a look at our gross profit. So our revenue is down, but our gross profit is actually up slightly for the 3-month period and is actually almost essentially flat for the 9-month period. Why is that happening? Because our cloud business is growing fast and it's a high margin business. Take a look. We went from 74% margin up to 77% margin. So that's a good sign that they are still growing the business from a top line perspective, but they're also growing it from a gross margin perspective as well. That is a positive for this business. We see though for the 9-month ended is essentially flat. They had a really nice quarter with this. The rest of the margins are essentially flat. You could consider them legacy business or businesses with enough competition that there's just not a lot of pricing power there. Now, our blended gross margin came in nice though. We went from 46.2% in the previous period up to 48%. They obviously noted that in the press release, and we did the same thing for our 9-month ended. So there's a little bit of push and pull here. In general, though, this is not necessarily, you can see why this stock is basically traded flat and it's down in the after hours. This is not going to get investors super excited. Now, from a cost perspective as well, we're keeping those under control. We're actually declining our cost here. We see we went from 6.8 billion down to 6.6 billion. So we grew the gross profit and we dropped our total expenses. So that's kind of a positive as well. Although, these businesses, this business in particular is kind of benefiting from cost cutting as opposed to growing earnings. So that's not necessarily a good sign. Now, for the 9-month ended, we are growing our total expenses. So it is something that was maybe quarter specific as well. Now, moving down to net income down here. So our net income was essentially flat. We were at 1.7. We were at, basically rounded up to 1.7 in the previous period. Now for the 9-month end, not as good. We were at 5.7 in the previous period. Now we're down to $4.23 billion. So we're seeing that decline. Now here's what I was talking about with the dividend. So you come back here to Yahoo Finance and you see they pay $6.52 per year per share on a dividend. That's a 5% dividend yield. So they're giving you, the shareholder, $6.52. Again, that's for 12 months. We see here for 3 months, we made $1.90 diluted. So you can annualize that out. And yes, it is over the $6.52 that we're paying you, but not by a whole lot. And you take a look at for the last 9 months here, we've actually only made $4.76. So not as good a dividend safety as I like to see. And, I'm not saying that IBM is going to be cutting this dividend anytime soon. I'm just saying it could be something that could come to fruition at some point. We've got cash and cash equivalents nicely up. Okay, this is probably likely to do some kind of fundraising, things like that. And so we come down here to short-term debt. That's up a little bit. And we've got long-term debt up a little bit as well. Quite a bit of debt. And so that's why you have to worry about these companies that pay a pretty large dividend and then are not growing earnings very quickly, and then also have quite a bit of debt that they need to service. Usually not a great combination. You're seeing it play out in the stock as well. I want to move down really quickly to cash flows as well. And so we see here, so we pay dividends right here. So you can get it from a cash, I just showed you they pay $6.52 in dividends. Well, here you can get it just in a straight cash perspective. So we pay in the quarter, the most recent 3 months, we paid $1.4 billion, almost $1.5 billion in cash. And again, you can come up here and see our net income was $1.7 billion. We're paying the vast majority of profits with IBM out into a dividend. Now that's great for you, the shareholder, but if you're looking for growth, well, a lot of the money is getting sucked out of the company and then given back to shareholders. So it depends on how you look at that. So, and then see down here from a 9-month perspective, we paid $4.343 billion. So we'll call it about $4.4 billion. And then you can come up here and see our net income was actually 4.23. So we're actually paid out more than we actually earned in net income for the last 9 months. That's why I wouldn't be, feeling super safe about this dividend. I don't think it's necessarily in danger today, but if the next 12 to 24 months trend in the same fashion as the last 9 months has with IBM, they're going to have to make some tough decisions here because they do have quite a bit of debt. Now, moving on to the stock chart, we have been locked up in a range with this stock. We're actually elevated up in this range. We're actually right here, right at the 124 mark. This stock has traded down numerous times over the last, call it 6 months or so, down into this 116. I think if you want to pick up IBM, I would look for it closer down, not necessarily all the way down to 116, although it's possible you get down there with some kind of broader market sell-off, but 116 to 119, maybe even up into the 120s could be an interesting spot if you want to play IBM. Again, the dividend, not super safe in my opinion, but you could bounce this around. The stock could come down here to 118, 117. The yield could kick up. That would tick people into buying this stock and could drive up the share price. Now, it hits its head anytime it gets up into the 129, 130 range. It hits its head. It sometimes kicks through it and sometimes pokes its head through that 130 range, but it has been a pretty firm line in the sand for the stock, at least past the March lows that we saw with most stocks made earlier this year. So that's IBM for you. Got a nice dividend. I would set some stop losses. If you're in this just for the dividend, you're obviously not in it for capital appreciation because that's not what the stock has been doing, and it doesn't appear based on the numbers that it will. So I would have a stop loss in there. You could set it at this 115, 116 range if you want to go a little lower than that, 113, 110 if you want to get lower than that. The stock did make a low into the low 90s earlier this year, so it does have the potential. It has shown the potential, I should say, of getting down back into that range. So you just want to be careful if you're holding this for a dividend that you don't let the share slide off so much that it'd be hard. It would take you a year to recoup that just based on a dividend yield, which again, I don't necessarily think is 100% safe in the near distant future. So there's IBM for you. Hopefully you guys enjoyed that one. We got more videos for you coming this week. Consider hitting that like button and maybe that subscribe button as well. Would really appreciate it. Thank you again. Good luck with your investments.